When we're looking at Tesla, are we thinking about this as a car business? Or are we thinking about it as a robot biz going into earnings?
I think in Q4, we could see a similar level of growth. We could make up much of the decline from the first half of the year.
All that more. So let's get to it. Ahead of Tesla's Q3 earnings of 2024, TSLA is down in the pre-market about 0.5%, currently sitting at $216.90. For the week, the stock is down just a little over 1%. For the month, down a whopping 12%, and down 13.25% year to date. Is it possible that Tesla could rebound and reach break even by the end of the year? Or are we destined to crawl back below $200 per share? Much of it depends on this earnings report after the bell, their guidance on the call afterwards, and a presidential election that will be decided in a couple of weeks. Exciting times indeed.
The Tesla earnings is a highlight this week, and General Motors setting the bar a bit high. When we're looking at Tesla, are we thinking about this as a car business? Or are we thinking about it as a robot biz going into earnings?
Well, autos will still be the main product, and that will be the main driver of revenue and ultimately profits when Tesla reports. But longer term, Elon Musk wants to invest to position the company as more of a software and robotics company, moving away from autos over time. But that being said, we still think autos will be the main business throughout the rest of this decade and the major source of profit.
Hard to argue with SETH there. I mean, they are planning to be the highest volume producer of battery electric vehicles by 2030. Seth Goldstein, running the equity analyst report for Tesla over there at Morningstar, has a fair value estimate of about $200, considers the stock to be overvalued at the moment. Seth did update the analyst note after the Robotaxi event. In our view, the key takeaway is Tesla plans to launch an unsupervised version of its full self-driving autonomous driving software in California and Texas next year. That was my key takeaway as well. Tesla aims to retain its market leader status as EVs grow from a niche market to reaching consumer mass adoption. I can't argue with that. Wait a minute, there's more. We forecast EVs will reach 40% of global auto sales by 2030. That seems a bit low, however. Seth says some pretty interesting things, almost quite bullish, but the analytics seem to be very, very reserved. Almost as if it's unfathomable that there will be an unsupervised taxi service. That global EV sales couldn't possibly be over 60-70% by 2030, and that the main beneficiary of such an adoption would be the best manufacturer of battery electric vehicles, Tesla. Just keep that in mind.
What's reasonable? I mean, should it then be valued as something with a lot of growth potential still?
I still see potential for a lot of growth. We might not see deliveries growth really accelerate in 2025, but if Tesla maintains its timeline to launch the new, more affordable vehicle next year and really ramp up deliveries in 2026, then we could see deliveries growth start to resume the traditional double-digit pace that we've seen in most years before this year. And then we could see revenue accelerate also with the energy generation and storage business continuing likely double-digit solid build out and deployments. We will likely see Tesla still, maintain these strong levels of growth that are currently priced into the stock. And I still think it is a very high growth stock.
Okay, so then the standard here, what do they need to do to prevent the shares from dropping more? What do you think the bar is set at for their earnings? What's the most important figure? What do they need to hit on?
I think we need to see three things. First, I want to see how automotive gross profit margins do with deliveries resuming growth. We saw 18.5% through the first half of the year in both Q1 and Q2. So I want to see either margins remain flat or some margin expansion given the deliveries growth.
Should the margins trough further, well, let's just say there might be a panic on Wall Street. Any margin erosion that occurs now, maybe even the next quarter, FSD take rates are sure to make up the difference whenever they decide to add them to the balance sheet.
Second, I want to get an update on full self-driving, either adoption or miles driven, because ultimately that is the catalyst to train the software to make it ready for robo-taxis to be a real thing.
Not to mention the catalyst of margin expansion.
And then third, I want to hear an update on the more affordable vehicle. I want to hear, is that still going to go into production next year? And is the timeline for 2026 to see double-digit deliveries growth ramp up? Is that still a reasonable timeline? I'm hoping we'll get all three questions answered on the earnings call.
I'm not sure if we'll get the answers for the more affordable vehicle, but one thing is for certain. To prevent Osborning sales of the Model 3 and Y, it's going to be a really thin line between unveil and first deliveries. I'm willing to wager that by the time they unveil this thing and have first deliveries, it'll be the shortest time period in the history of a product unveil for Tesla. I'm talking same quarter. Unveil this thing at the beginning of Q2 2025 and then have first deliveries at the end of Q2 2025. With any luck, by the end of Q2 2026, this vehicle will be ramped to full production. And the Cybercab soon after. Maybe in multiple factories.
We're talking mid-single digit growth. Is that going to be the forward look too? Because they're going to report basically around single digit trailing numbers. The outlook, is that consistent that they're going to be around the same pace?
I think in Q4, we could see a similar level of growth. We could make up much of the decline from the first half of the year. And I think Tesla could get to about 1.8 million deliveries again for 2024. And we might not see growth versus 2023, but at least would see 2 quarters of growth in the second half of the year heading into 2025. So I think we'll see much improved results through the rest of the year, setting us up for, a better results in 2025 versus 2024.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother. Right. I'm looking at Q4 deliveries well over 500,000 vehicles delivered. It's a bit ambitious, I know, but it's what we need to try to mitigate this loss of growth year over year. But Seth couldn't have said it any better. 2 consecutive quarters of consistently high growth heading into 2025. It'll go a long way for the Tesla growth story to resume what it once was in its glory days. Unfortunately, it will come at the cost of margins, and I know what you're about to say. Oh no! The margins! And to that, I say the margins will come. Especially when FSD goes overseas to China. Skips across the pond, over there in Europe. Don't worry your pretty little head. The margins, they will come back stronger than ever. In conclusion, I love looking at Seth Goldstein's analytics. You kind of get the sense he wants to be very bullish, but is quite reserved. Hopeful, yet quite practical. I really find it quite refreshing. Seth is fully aware that Tesla could possibly be the most valuable company in a decade's time. He just won't put that in the report. Quite a few unknown unknowns, if you know what I mean. But Tesla's execution has been spot on, and you get the idea that he was kind of impressed with the Robotaxi event, despite the stock falling. As far as price targets all across Wall Street, I expect our friend Seth Goldstein to be smack dab in the middle of the bulls and bears, while maintaining rosy, bullish outlooks with a hint of bearish skepticism mixed in. Quite frankly, all of this is just noise to the people that work at Tesla the company. The AI team, the manufacturing, all of that is just going exceptionally well. I fully expect Tesla to be firing on all cylinders as they head into 2025. That's all I've got for you today. Be easy. Peace.